With Lee and Associates, Central San Diego, giving you a market update for the month of September, looking back at some of the bigger news that we've seen hit and a little bit of the trends that we see going on in the office. So, going through the CoStar news here, UTC did announce a big biotech project or new campus they're planning. This was a little bit surprising at first because biotech's been in a bit of a free fall. All that COVID money that really helped out a lot of the biotechs over here in the UTC area has dried up, and we see a lot of the bigger firms actually letting go of space. But if you look a little bit lower in the details on this, you see that this is planned over the next 10 years. So Josh Ohl, the economist for our local CoStar office, said it's not really a big deal because it's going to be spread out over 10 years. We are seeing the building of some biotech hubs in downtown. The problem is not much of that space has been leased yet, and some other space here, either in Sorrento Valley, Sorrento Mesa, either hasn't been filled or some of the tenants are backing out. So biotech's a little bit shaky, and we're seeing a pretty big downturn in that. Employment, not really a big issue right now. Employment's been pretty steady, so nothing really to change. This one talks about, again, the rising availability that's hitting the biotech labs, and that's really the bigger thing that we're seeing. San Diego's suing SeaWorld for rent that they didn't pay during the pandemic. Isn't really going to affect anyone. This is a pretty interesting one on the development side. So Governor Newsom signed some legislation a couple weeks ago that will basically allow developers that have partial low income in their development to be exempt from some of the CEQA, the environmental reviews. Basically, it's eliminating some double reviews. So that's actually a really good thing for us to see. In other commercial real estate news, the biggest one, and this is my market because I do office, is office conversions. So office is in just a free fall. We're seeing vacancy rates head up into, depending on the sector of town you're in, anywhere from 25 to 35%. And the bigger concern is that a lot of those leases for companies that maybe signed a lease just before COVID, those leases are going to start coming up for renewal, in the next 1 to 3 years here. And the biggest issue that we're seeing, and I've got another article over here about it, is return to work. And return to work just isn't happening. We've seen the numbers from a lot of data brokers with office attendance, and it's just kind of stalled at about 50% of pre-pandemic levels. With unemployment being so low, there's no real pressure for employees to go back into the office because if they don't like their workspace, they're already working at home. They're not really integrated into the office. So for them, just to disconnect from one network and connect to another is pretty much nothing. So there's a lot of control with the employees right now. And we've had one economist tell my local SIOR chapter that we're really not going to see that change until we get some major unemployment. And then, the managers can demand, like, oh, if you want to work here, if you want to have a job, you actually need to come into the office. Of course, this does hurt things like office morale, a lot of the indoctrination and the company feeling that workers used to have. So there's definitely some harm on the companies. At the same time, a lot of companies on the leasing side are able to save money if they can downsize their footprint by 50%, and essentially their workers are taking over that burden of providing the office space, the computer, whatever at home. That's a net savings to the owner, to the manager. So in office space right now, not only are we seeing a large amount of vacancy advertised, but there's a lot of what I call ghost vacancy. If you go into office buildings right now and look around, and you'll see this in our own building, most offices are basically empty. Lights are off. People aren't in there. And I think that we're just going to see more and more as those leases come up to renewal, the owners are going to say either, you know what, we've all been working at home, it works fine, or we need to significantly down space, have a space for the core office space, maybe have some shared areas for the people who want to come in 2 or 3 days a week. But I think this is a long-term thing. I don't think we're going to go back to the pre-pandemic office ever. So that's where this office conversion is really becoming interesting. And I'm really trying to reach out to office owners and find out, hey, what can we do with your space? For the offices that are trying to attract new people or people back, it's all about the amenities. Do you have any amenities nearby, places to eat? Is there fitness stuff available, like a gym? I know at the Voight office, they have a gym downstairs, which is amazing because you can go and get your workout done. So little things that make you actually want to go into the office. That's really where the development that we're seeing and people that are trying to attract tenants in, that's where they're putting their money in. The Class B and Class C spaces, you really have to make that hard decision of, does it make any sense to put more money into my building, or would it be better to look at repurposing it into flex space, into residential, into ghost kitchens? There are a lot of things that can be done with these buildings. And, you know, if you've got a single story building on a lot of land, it actually might be worth more to scrape it and look at building something new. Senior housing, they say set for a gangbuster next 18 months. Senior housing is going to be gangbusters for the next 20 years because you've got the aging baby boomers. So I don't think that's any surprise. Retail in San Diego has continued to be strong. That was a little bit surprising for a lot of people, but retail traffic is good. There hasn't been a lot of vacancy. In the industrial space, what I'm hearing from my coworkers here is that it's healthy, but there's no availability. And we're having some sectors like Kearney Mesa and up in Miramar where actually space is being taken away from industrial to make room for residential. So there's a problem because supply is shrinking and demand is staying the same or increasing. The only place where we see a little bit of a pullback is from some of the Amazon warehouses, where Amazon really during the pandemic had to overbuild because so many people were getting their stuff delivered from home, and they're starting to not need as much of that mega space. But overall, from what I'm hearing on the industrial side, prices are up and they're not really going anywhere. So retail prices are steady, industrial prices are going up, multifamily prices continue to be strong. Availability of multifamily here in San Diego just isn't great. You're not going to get a good rate of return. And then office is the place where there's a big decline in office values. So let me show you a little bit of what's going on. This is the overall market for the last month. So pretty good sales volume, sales price is decent. The big number we've been watching just grow and grow this year was the months to sale. And this is heavily weighed on by office. If you go in here and you look at industrial, that number is going to drop way down. Yeah, 4 months to sale on industrial. And then I think for multifamily, it's even smaller. So 3.8. Those type of assets are not staying on the market very long. But when you get to something like office, and I've really seen this in my own listings, see that 9.5 months. And I think that's very typical. Stuff is just sitting out there. Owners are taking the stuff off the market because literally they're getting offers at half of listing price. And I'm getting a lot of offers in my inbox right now of these kind of predatory buyers that are looking to maybe take advantage of defaults. So that's really what's going on for right now. We just want to keep you updated. If you have any questions or need any help with leasing or selling your property, please give us a call. We can be reached at 858-453-9990. And once again, this is Rick for Lee & Associates San Diego.